Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
In this session, we're going to complete 5A2, 5AII of the May 2004 Principles of Accounts past paper. In a previous session, we had looked at part AI. That was a trading profit and loss account. Yes, the income statement. If you have missed that lesson, the link will be in the description below. Now, let's move into the question. And what we're preparing is the balance sheet as at September 30th, 2002. Yes, that's a statement of financial position. From the previous lesson, we had used some items from this list of balances from a trial balance, right? And there were some items that weren't used. These items are provision for depreciation for machinery and equipment. We have capital, premises, machinery and equipment debtors, also known as your trade receivables, creditors, also known as your trade payables or accounts payable, bank, cash. And guess what? These items relate to the balance sheet, which we're going to prepare. Remember, the balance sheet, which is a statement of financial position, shows the assets, capital, and liabilities of a business at a particular time, usually at the end of the financial period. So what we're going to do now is to prepare the balance sheet. But guess what, guys? From the footnotes, remember I indicated in the previous lesson that the footnotes items are generally used twice. So these items, your closing stock, will be used in the balance sheet. The advance payment for the expense, which is prepayments, yes, that will be used in the balance sheet. We have the accruals, yes, balance sheet item. We have the another accrual, and that is for the insurance. This provision for bad debt, because it is a new figure, it will be used in the balance sheet. And we have the depreciation of the machinery and equipment. And yes, those will be used in the balance sheet. So the items that are ticked, people, we're going to be using those in the balance sheet. So let's move over in preparing the balance sheet. And the first thing that you need to ensure that you show, and the question specifically stated that you need to show clearly the headings. So your headings are important. And we begin with the title of the balance sheet, which reads Busy Traders Balance Sheet as at 30th of September 2002. Now remember, this is a vertical structure, and the vertical structure reflects the accounting equation, assets minus liabilities equal to capital. And we're doing a classified balance sheet, so therefore we need to categorize the items. So we're going to begin with fixed assets. Now, the fixed assets coming from the question are the machinery and equipment, and we have premises. Now, in order of permanence, premises will be listed first. Premises. And the value for premises is $15,000. Once there is depreciation in the question, people, you need to label the columns for the fixed assets section as cost, accumulated depreciation, and net book value. That's how you should label the columns. And we begin by entering the value for the premises under cost, that is the cost price of it, which is $15,000. But this item did not depreciate. So therefore, there's no accumulated depreciation. So the net book value remains at $15,000. The next item was machinery and equipment. And this item value, the cost price coming from the question, is $15,000 as well. But this item was depreciated. Let me put in the cost price, and then we move over to looking at the accumulated depreciation because we need that figure. The item had depreciated. So guess what? We need to show the total depreciation to date. So let's pick up those figures. So we're going to calculate that. Machinery and equipment depreciation provision was 4,500. What this is basically saying is that up to the end of the last financial period, the item, that fixed asset, depreciated by 4,500. But for this period, it has depreciated by $1,500. So total depreciation, people, which will be the accumulated depreciation for machinery and equipment, is that 4,500 that is coming from a trial balance, and we're adding the 1,500 it has depreciated by for this year, which was the expense, and that gives us a total of $6,000. So within the balance sheet, what we are going to show as the accumulated depreciation for the machinery and equipment is $6,000. We now move into calculating our net book value. And remember, net book value is equal to the cost of the fixed asset less the accumulated depreciation. When we subtract the 6,000 from the 15,000 for the machinery and equipment, we are left with a value of 9,000. So what we're saying now, the current value for machinery and equipment is $9,000 because guess what? It had depreciated. Having entered all your fixed assets, you're going to total each column. 15,000 plus 15,000 give us $30,000. And guess what, guys? We are finished with this, the cost column of the fixed asset. So therefore, we are going to put a single line above and double line below because we don't need that 30,000 to continue with. We have 6,000 for the accumulated depreciation. And again, we don't need that figure. So we're going to put a single line above and double line below. For the net book value, which is the current value of the fixed assets, we're going to total, and that is 15,000 plus 9,000 give us $24,000. And this is what we are going to continue with because guess what? That is the value of fixed asset that we now have in the business because there was depreciation. So the current value now is $24,000 for the fixed asset. We're now going to move into the current asset section of the balance sheet. Or current assets, we have to go to the question to pick up those. And let me just highlight those items. We have debtors, we have bank, we have cash, and there is closing stock, and there is the expense that was paid in advance, that is prepayments. Prepayment for expense is a current asset. When we are doing the current asset section, when you get on to debtors, because there is provision for bad debt, you need to subtract the current value for provision for bad debt from debtors. It's going to decrease your debtors. So we're going to move over to entering the current asset section of the balance sheet. So in the correct order is inventory, which is the stock. And remember, that's the closing stock figure. That figure was $9,000. The next item is debtors. And the other name for debtors, again, people, is trade receivables. And that was $11,250. From that, we are going to less the provision for bad debt, also known as provision for doubtful debt. And the current value, that is what you're using, the new value, the current value for the provision for bad debt, and that is $300. This is going to decrease your debtors figure. So therefore, we are going to subtract that. Once you find the difference, it is placed in the row directly beside that, and that is $10,950. The next current asset that we have is the prepayment. And remember, that was the rent that was prepaid, and that value is $2,000. We are now going to pick up our bank because we have to ensure that we put the items in the correct order of permanence. And the bank value is 4,125, and that followed by the least permanent item, which is cash, also known as the most liquid asset. So that is cash, and that's $3,000. We're now going to total these to get our total current asset. Our total, people, is $29,075. Now that we have our assets, we have completed a part of the balance sheet. Our aim now is to pick up our liabilities, because remember, the accounting equation that is reflected in the vertical format is asset minus liabilities equal to capital. So let's go with our current liabilities. And let's go to the question now to pick up those current liabilities. The current liabilities from the question are creditors coming from a trial balance, and from the footnotes we have wages and salaries that is accrued of $1,700. We have insurance that is accrued of $300, and that would give us our current liabilities. Those are the only ones in this question. So let us enter those in the balance sheet. Creditors, remember, that is also known as your trade payables. And because we need to calculate the total current liability to be used in the middle column, we're going to do our calculation in the first column. So that is $8,250 for creditors. Our accruals, the value, let's calculate that, 1,700 plus the 300. The 1,700 relates to the wages and salaries, and the 300 relates to the insurance that was accrued. So that gives us a total of $2,000 for the accruals. Now that we have the current liabilities listed, we can now generate the total current liabilities, and that is $10,250. Now that we have that, guys, we are now able to do our calculation where we're subtracting total current liabilities from the current assets. And once you subtract your current liabilities from current assets, what you're going to get is working capital. Or you could refer to that as your net current asset. The difference, basically, our working capital, again, that is current asset minus current liabilities. That's a $29,075 minus $10,250. That gives us a value of $18,825. What do we do with our working capital? This figure is added to the fixed asset value. So it is 24,000 plus 18,825, and that gives us 42,825. Our next step is to subtract long-term liabilities. So we need to check if there is any long-term liability in the question. There is no long-term liability, so therefore there's no need for us to enter that in the balance sheet. So therefore, what we're going to do now is to enter our single line above, double line below for this value, and that is referred to as our net assets. So we have completed the first half of the balance sheet, and we have the figure assets minus liabilities. Our next aim is to prepare our capital section of the balance sheet, and that is the finance by section, where our aim is to determine the new capital that is in the business. And we begin by picking up our old capital, and the old capital coming from the question is 37,500. So let's enter that, 37,500. Our next aim is to add net profit. Net profit is not in the question. We pick up our net profit from the trading profit and loss account that was prepared earlier, and that is the 12,825. So remember, this is a figure that you're using in the balance sheet as your net profit, which is 12,825. That is usually calculated, that is calculated in the income statement, which is your trading and profits and loss account. Let's enter that figure. So net profits is 12,825. If that figure is incorrect, definitely you'll be posting the incorrect figure right here, and then your balance sheet will not be balanced. So having entered the net profit, we need to know total, and our total is 50,325. And we need to move into the other part of it. We need to check if there is any drawings in the question, because drawings will decrease your capital. And yes, there was drawings of 7,500. So we're going to enter that in the balance sheet, and that is less drawings. The value for drawings again is 7,500. Now we are able to generate our new capital. So after we have generated the difference between the 50,325 and the drawings, we have a new capital of 42,825. And the figures that are double underlined, are for the net asset, which represents the assets minus liability, that is 42,825. And when we calculate our new capital, we have 42,825 as well. So we can safely say that we have completed the balance sheet accurately, because guess what? Total assets minus liabilities is equal to capital. So that takes us to the end of completing number 5A2 of the May 2004 Principles of Accounts past paper.
Like, share, and don't forget to subscribe.